Hello world. Today, I'm going to share a key insight that could change the way you think about trading success. You may have heard about win rate, the percentage of trades you win, but here's the truth. Win rate alone won't make you profitable if you don't have two other critical pieces, a strong edge in your strategy and solid risk management. I'll explain why focusing on win rate can be misleading and what you should focus on instead to become a more consistent, successful trader. Let me show you the way of a Black Hoodie Trader. Let's start with win rate. In simple terms, win rate is the percentage of your trades that end up as wins. For example, if you win 6 out of every 10 trades, you have a 60% win rate. A lot of traders think that a high win rate equals a
Order
more
filled.
successful trader, but that's not necessarily true. Here's why. Let's say you have a high win rate. Maybe you win 90% of your trades. That sounds impressive, right? But if the 10% of losing trades are much larger than your wins, those losses could end up costing you more than all your wins combined, leaving you with an empty account. Focusing on win rate alone doesn't give you a true picture of profitability, which brings us to a crucial concept called the edge rate. Now, let's talk about edge rate. In trading, edge rate is about understanding how often your strategy holds true under real market conditions. In other words, it's not just about how many times you win, but how often the core principles of your strategy actually give you a repeatable advantage. Think of it this way. Edge rate is like knowing the batting average for your strategy. How often, over time, the setup and market conditions align in a way that consistently produces profitable results. By understanding your edge rate, you're getting a realistic picture of when your strategy actually performs as expected. For example, imagine you have a strategy based on certain patterns in price action, like specific support and resistance levels. Let's say that over hundreds of trades, you find that your strategy holds true about 60% of the time when those patterns appear. That's your edge rate, the probability that this setup will work in your favor based on historical data. Once you understand your edge rate, you can then look at your win rate to see how often you're actually capturing that potential. So, while win rate tells you how many trades you're winning, edge rate tells you how often your strategy sets you up for a favorable outcome. This is why edge rate is so important. It helps you focus on the trades that have a higher chance of success according to your strategy. It's your edge rate that ultimately helps you decide which trades to take or skip based on their likelihood of success. Now, let's discuss why a lot of retail traders or everyday individual traders struggle to make consistent profits. One big issue is that most new traders focus only on finding a high win rate. They think if they can just win more trades, they'll be profitable. But as we talked about, a high win rate doesn't necessarily mean you're making money overall. This mindset is often encouraged by trading gurus or online influencers who only show their winning trades, implying that a high win rate is all you need to succeed. They rarely mention edge rate because the majority of retail traders have never heard of the term edge rate, yet alone knows how to apply these two techniques together. So many traders are left without a full understanding of what actually makes a strategy sustainable over time. The reality is that trading success isn't just about winning more trades. It's about having a reliable edge rate and practicing good risk management. When retail traders overlook these principles, they end up taking trades with low odds of success or risking too much on each trade. This can lead to large losses that are hard to recover from, which is a big reason why many traders fail in the long run. So how can you make sure your focus is in the right place? Here are some practical steps to help you succeed. Focus on quality over quantity. Instead of aiming for as many wins as possible, focus on quality trades that fit your edge, where the setup aligns with the strategy and has a higher likelihood of success. This means being selective and patient, waiting for the right conditions rather than jumping into trades impulsively. Know your edge rate. Track how often your strategy holds true over a large sample of trades. By keeping a record of how your strategy performs over time, you'll be able to calculate your edge rate. Knowing this gives you confidence to stick with your strategy because you're relying on real data, not guesswork. Implement risk management. Set strict rules for yourself about how much of your account you're willing to risk on each trade. Stick to a maximum risk per trade percentage, like 1 to 2%, to protect your account from major drawdowns. By managing risk effectively, you're ensuring that even if you have a few losses, your account is still healthy and you're ready for the next trading opportunity. When you focus on these elements, quality trades, edge
Order
rate,
filled.
and risk management, you create a trading approach that's sustainable and rooted in real probability. This is what leads to long-term success in making your way out of the rat race. This is the way of a black hoodie trader named FaZe.